Yo, what up, YouTube? What up? What up? It's your boy Train the Trader. Simple question for you guys today. If I pulled up a chart and I asked you to point out the four components of a candlestick, could you do it? Would you struggle? Would this be difficult for you? If this is a difficult task, or if you don't even know what I'm talking about, then this video is for you. Today, I'm breaking down candlesticks for you guys. Let's get into the video. Let's get it. What it do? What it do? It's your boy Train the Trader, and we back. It's Saturday, January 11th, and I'm trying to get this video in before this playoff game starts. Who y'all got in the playoffs? And this Ravens and Pittsburgh game. By the time y'all watch this video, it's probably gonna be over. So, but let's get into it. So today, I got something very basic but very essential when it comes to trading. I'm breaking down candlesticks today. I did this video before, but I realized when I look back at the video, it had some good information in it. So if you didn't see that video, I'll drop that here. Go check that video out. But you can kind of add this to it, if you will. But when I was watching it, I was like, why did I make these candlesticks so small? And that was a mistake on my part. So I'm running it back. I might repeat some of the same stuff that I mentioned before, but I'm running it back. And this time I'm going to blow up the candlesticks so it's a lot easier to follow. I don't know why I did that to y'all, but hey, we mess up sometimes. It's all good. All right, so I got a chart here of Walmart. The chart doesn't really matter. The stock doesn't matter. We're talking about candlesticks and how to break down candlesticks today. So, the four components of a candlestick. I'll write them out here, but they are the open, the high, the low, and the close of a candlestick. So, I'm going to mark these four areas on this green candle right here, and I'm not going to make the same mistake. I'm going to make sure this thing is massive so you guys can see it and you can follow along very easily. This green candle right here. So first things first, this green candle is green, and I'm going to show you why it's green. We're going to mark four areas here. This one here is going to be the open. This is going to be the low right here. This is going to be, actually, I'll do this one instead. The high of this candle, top of that wick, and then you have the close, the top of the body of this candle. So this is called the body of the candle. This would be a bottom wick. This would be a top wick. Now, are wicks important? They can be. I'm not going to get into that right this second, but yes, they can be. And now let's do another candle. Perfect. We can use this one right here. It's magenta, fuchsia, whatever you want to call it. On some people's charts, it's going to be red. But now let's mark the open, which is right here. The top of the body is the open. The low of this candle is this bottom wick right here. We got the high of the candle right here at the top of that wick. And then we have the close. Now, you do this a couple times, it'll get really easy to kind of pick up on these things. And that's what it takes, is just looking at it, getting some practice. But you do this in like 15, 10 times, something like that. Mark these, you'll have it down pat. That's how easy it is to grasp. So, why is this important? Because now that we understand where a candle opens, where the high was, where the low is, and where it closes, we get a picture of color whether it be bullish or bearish. And that, ladies and gentlemen, is the first key to understanding the trend that the stock is on currently. If you can't tell where a candlestick open, close, where the high was, where the low was, then you're going to have a really hard time tracking the trend of the market or of that stock that day, that week, that year, whatever it may be. This is applicable to all charts, all time frames. So, why is this one green and this one red? Well, very simply, this was the open. So, this is the price that this particular stock opened on this candle. This is where it closed. So the price was lower, making that a red or fuchsia or magenta. And then we have our green because our open was lower than the close. Very simple to understand, but I asked a couple guys in the group like to do this, and they really kind of struggled. So I was like, let me put my thinking cap on and get back in this and break this down again. Have a video that people can reference for this, because this is the base of understanding charts. And if you can't understand this, then you're going to really struggle understanding charts, price action, all that sort of stuff. So now we can get into why this information is important and how we can find trend based off of that. And this leads to kind of one of my trading techniques. We have this stock opened up with a red candle, and then the very next candle we get the open here at the bottom, and buyers immediately push through the close right here, from the close through the open of this first candle, straight through it, and go out and take out the high. Very clear to see that the buyers have stepped in right here. Buyers continue to push the price higher right here. Buyers continue to push the price higher, higher, and then we get a reversal candle, a reversal elephant candle with the open here and the close all the way down here. Overall, though, this is why it's easy to track the price, because we can see that although the price took off, pulled back down, it held right here at this 92.49, 92.50 area, which so happened to be the opening price of this red candle. Held that price and never got below that price. So this is how we can start to figure out, okay, if it holds this area, bam, maybe I can take a chance on calls here for a move up higher. And if you did, cash me out. So getting a little long-winded on something that's supposed to be very simple, but just understand, go through your charts, pick out some candlesticks, and just familiarize yourself with open, low, close. Okay, got that one. Open, close, high. Okay, got that. There's got a little bottom wick there. And just do this over and over and over again, and you'll get it, I promise, in no time. Top wicks. So earlier I said, are wicks important? It depends on where they are. If you get for instance, top wick at the top of an uptrend, then that is a sign that there could be sellers stepping in, like this one right here. We went on this trend to the upside, kind of peaked out at price up here. Sellers stepped in. Next candle, buyers couldn't push it higher than that high of the previous candlestick. And next thing you know, sellers dump it. Okay? These are clues right here. These top wicks at the top of a trend would be a clue. Now, something like this in the middle of a trend, not necessarily important. It's not really giving us a whole lot. It's just telling us that there's a battle between buyers and sellers right here. But we're still overall in an uptrend. And when you start getting more seasoned in trading, you'll be able to spot these top ticking wicks followed by some seller candles pushing the price back down, and you'll start to pay attention to these top wicks at the top of an uptrend. And yes, does it work to the other side? Absolutely. Absolutely. It sure does. We get bullish pressure right out the gate on this day. Look at these top wicks. Top wick. Top wick. This is a shooting star right here. This is a doji candle that is pretty important when it comes to trend changes. But look at how long this wick is. So the buyers had pushed it up as high as this, and sellers immediately stepped in and pushed it back down right off of this high. And look what happens. Downtrend, downtrend, downtrend. Right? And then we get another doji candle here. This is somewhat like a spinning top, but maybe a little bit longer wick. It would be a legit spinning top, or and that's also a signal. And then you get buying pressure, step in, next candle, breaks that high, and we're off to the races again. So that's how you can use these wicks. Pay attention to wicks at peaks and troughs. So at highs would be the peaks, and the lows would be the troughs. That's where you really want to pay attention to those wicks. All right? So go through your charts. If you guys like what you hear, don't forget, like, subscribe, share this information. We're growing. 2025 is going to be a year of movement. I'm so excited for what's to come, what I'm going to learn, and how many people I'm going to be able to help learn this craft. This is a skill set that will pay you for the rest of your lives and your kids' lives and their kids' lives and so on and so forth. So as long as the market is in operation, money is to be made, and a lot of it is made every day. All right? Appreciate you guys if y'all made it this far. I fuck with y'all. Y'all the real ones. If you got any questions, don't forget to hit me. Y'all have a safe weekend. Go enjoy the playoff games. UT fans, I'm sorry. That was rough. That was rough. What an ending. But quality games. Y'all know what it is. It's your boy Train the Trader. I'll catch y'all next time. Peace.